let's now talk about a company that's moving to Australia. Some other South African companies have done that and haven't done too well. Pick n Pay comes to mind. Human capital management group Adcorp has reached an agreement to acquire the entire issued share capital of Paxus. That's the Australian market leader in IT contracting and recruitment for approximately 545 million rand. And Adcorp ended the day 0.6% lower at just under 30 rand. And Group CEO Richard Pike is with us here. Richard, just tell us the essence of this deal. It's in summary, it's 545 million rand, some by debt, some by new shares that you're going to fund it.
Yeah, the deal, as you say, 545 million rand. We're going to fund about 60% of it by way of a fresh issue of 13 million Adcorp shares. And then we're funding the balance, which is about 28 million Australian dollars, by raising Australian debt. We have that debt in place at the moment, and that provides something of a natural hedge against the purchase consideration. But it has its roots in an acquisition we did exactly a year ago. We bought Paracon, which was the market leader in South Africa, or is the market leader. And this is a natural extension to this. So when we found Paxus looked exactly like Paracon. It's a strong space to be in, the IT space, IT contracting space. It's been robust, it's been buoyant. It's an area that we see growth. We see quite a lot of synergy between the two companies. So it was a business that we found, not a geography that we sought. And so it wasn't we went to Australia looking to buy a business. We found a business that happened to be in Australia.
Is this a case of trying to diversify out of South African risk? Because you're obviously facing a problem of things like the attack on labour broking and that kind of thing. And my immediate sense is you want to try and actually get a greater critical mass of operations outside South Africa?
Chris, no, not really. I mean, you know, your take is right. We've been under pressure. There is legislative change that we anticipate. But we actually see opportunity in that. So we're still actually bullish on the South African story.
Right.
We're very bullish on the African story, as you mentioned, David. We've expanded quite a lot into about 6 African countries. We're doing a lot of work in the resources, the infrastructure related to resources where their skills are demanded around engineers, artisans, IT professionals, etc. So we're still very optimistic about the South African story.
Yes.
This is not a diversification for diversification's sake, but it does have that advantage that we do get some geographic spread.
And what's quite interesting too is that its earnings are accretive. Well, the one thing I picked up, Richard, perhaps we can quantify over here, it's about over 6 months, about a sort of 25 million bottom line in RONT. The company does a clean earnings of about 35 million in 6 months. That suggests on an annualized basis that you bought this on a PE of about 8 or less.
Yeah, slightly more than that. We've been quite conservative in terms of our forecast around the business. So we guesstimate it's about a nine times earnings multiple if we look forward. You know, and we've been conservative. We think there will be some cost in terms of transitioning it across to ourselves. We want to retain the staff in the business, so we're going to have to incentivize them in the initial parts. But so it is earnings accretive.
Yes.
But we think the real benefits are going to be in years 2 and 3, and that's where the real synergy between what Paracon does and what Paxus does come together. You know, Paracon has an interest in a 35% interest in an Indian company called Neelant, and we've done really well out of that in that we've brought about 200 IT professionals from India into South Africa. We think there's the opportunity to do that into Australia. And then Paracon also has a local project management business, which we think we can export that product and service to Australia. So when you put that together, I think it is a 1 + 1 = 3 type of equation for the two.
Looking at the countries that you mentioned, Africa, and you mentioned Australia, we think of Australia as a nanny state, highly regulated. It's hard to think that they're more regulated than we are in some sectors. But what's it like there? Does it look as if you're going to be freer to do what you want? And then I suppose the second part of the question is, in a lot of African countries, they haven't thought of regulating labour brokers, let alone get close to doing it.
Yeah, you have different challenges, so you don't have that particular challenge. But interesting that you mentioned that, because the unions in Australia also don't like contract work as a principle. In fact, globally, unions don't like it as a principle. And there's another similarity in that the Prime Minister of Australia was actually funded by the unions to her post. So there's a political alliance between government and unions, which has a sort of familiar ring about it in the South African environment. But I think the challenges are different there. It is quite a litigious society, so a lot of legislation, a lot of litigation. But you know, I think some of the challenge we have here are different. In terms of the skills shortage, it's a more acute here. So there's an opportunity to bring Australian skill into South Africa.
I was going to say the synergies include interchangeable
accessing skill,
But doesn't that mean it might happen to have a South African base and an Australian base, but you'd be looking more as to become a global player where,
Chris, I tell
where
you,
it's not restricted to Australia, India, and
where
South Africa?
we've been trying to focus is the Southern Hemisphere. We like the Southern Hemisphere, and we like it from the point of view that there's a strong concentration and domination of the Northern Hemisphere. There are three big companies, Adcorp, Manpower, and Randstad. We have a formal alliance with Randstad. Those are the three biggest in the world. And when we say the biggest, they dominate in North America and Europe, and those markets are pretty flat to stagnant to negative. No one has become a global or a major player in the Southern Hemisphere geography. And if you look at us now, we really are making good strides into Africa. We now have this link into Australia. We have a link into Asia, which is granted Northern Hemisphere, but emerging market. And that's the kind of route we would like to take. We would like to forge alliances in South America, particularly in the resourcing segment, because there are multinationals that we service across all those geographies. So if we could build something substantial in the Southern Hemisphere, we think we've got something pretty special.
Would that possibly, Richard, mean you would acquire abroad, or with the Randstad example, would you use that possibly as a vehicle into LATAM and other markets?
Yeah, I think it's both and. We would look to acquisition. I mean, we know very little about South America. I'd be quite nervous about looking at acquisitions there. So the alliancing model does make some sense in that geography. There are other challenges like language, but we have those challenges in Africa. You know, in terms of legislation, every geography we in has different payrolling rules, it has different labor laws, it has different banking.
Just on that, you said you're bullish about South Africa. Now, people outside the company say, well, you would be expected not to be bullish. They're putting you under a lot of pressure, I suppose, because you're one of the big players, you're in a stronger position. Why are you bullish?
You know, it's interesting in our business, we like complexity. The more complexity, the more people outsource. And, you know, here you overlay more regulatory complexity, there's a more cogent reason to outsource. Who do you outsource to? Those people that can deal with complexity, who can do it at the bigger players. So there's no doubt in my mind that this all plays into the hands of the bigger players, and it's already happened. If you look at the number of agencies in South Africa, there were about 3,400 agencies in 2008, they're now about 2,800. So you've had about 30% of the number of agencies has disappeared, and I think you're going to have even greater concentration in the hands of the bigger players. So whilst overall the employment scenario in South Africa is relatively bleak and potentially unemployment might rise in my view, despite a number of initiatives to try and stem the tide, we think in terms of our market share, we will gain market share. And also the other great irony is that there's been this vociferous attack on contract labour. Ironically, I think the unintended consequence of the legislation that we see will be that there'll be more contract workers, they'll earn less, and they'll have fewer benefits. So it's going to have exactly the opposite effect of what it's intended to do.